Hello, welcome back again to educational video series for traderstruth.com and Wwealth.my. This is Martin Wong here, I'm your host, and today for this tutorial for the education video series, I will share with you the top 4 investing rule for 2012. Now most of you may argue and say, wow, another investing rule, isn't that enough? However, you may discover at the end of this tutorial that these 4 investing rules will help you to protect your capital and maybe increase your wealth for this year. Now, what are we talking about? Now, the first one is what you know everyone else probably knows as well. Now this is a very important point because a lot of time we tend to think that our idea is original, that we are the first people or the first person who thought of it, but we never check with other people where actually this idea was somehow implanted to us by a media or by something that we have read. And remember the movie Inception? The whole thing was that sometimes a lot of our surrounding and the stimulus tend to implant those ideas. Now, we have to know that in order to make money, you have to know something that no one else is knowing or no one else knows. That's the way to do it. So please don't be overconfident, which will take me to the later point. So what you know, everyone else probably knows it. Well, to make money, you have to know something that nobody else knows. Now the second one, which is a very important part, and it is part of what we do day to day. Timing is everything. Now, if you look at it from a technical standpoint, we must know that in order to do well in investment, we must be able to exit just before the market collapse or the market about to collapse, because timing is in everything. Now, from a price and volume standpoint, we must understand we are looking for clues. Now, remember the keyword is clues for sign of weakness at the top and to sell. Now, on the bottom side, which is the flip side, we must look for clues or understand clues for sign of strength at the bottom and begin to accumulate. And if you would do that, you will almost, most of the time, get out of a very difficult position, because the job is to look at the price and volume chart and to know when to exit and when to enter. So timing is everything. Now the third one is, which is what I've talked about, is a lot of time we are suffering from confirmation bias. Now what it says is sometimes we only want to hear what we want to hear. This is just a page flip out from the behavioral finance, which actually been studied into the human mind and how we think when it comes to loss and win, particularly talking about stock market. So this is actually got to do with also partly with the ego that we all have. Sometimes when we bought into a particular stocks and we believe we are right, we tend to hold on to it even prices are dropping. And you know what? We always look for people who agree with us rather than seeking an opposition view or opposing view. This is important because sometimes we may be wrong, but we tend to look for news analysts, people who agree with me, and continue to suffer this losing path. So be careful if you're suffering from the confirmation bias. And the fourth one is, I am guilty part of it myself. So fundamentals, valuation, ratios on companies, on isolation is useless. What it merely says that we cannot look at the fundamental of a company without looking at the macro environment too. Now, particularly if you're just going to look at the fundamental by looking at the PE, dividend yield, balance sheets, and income statement of a company, but not looking how it will do in the next 6 months, 1 year, 2 year, or 3 year. That is why sometimes looking at companies, we also need to look at the company forecast. Now, one of the things that we always tell people, if you've been following this educational video series, is to look back at the industry when we're in. That meaning we prefer companies and in consumer monopoly where people tend to eat, tend to drink, and tend to consume. So those are consumer segment. So that way we can see it is a recurring income. Now, if you're just going to be using fundamental ratios to analyze and to pick a stock without looking at what we call the point number 2, timing is everything, looking at the price and volume chart, then you will likely to see more failure in your investment. So use both. This is what we've been advocating in our website in here as well as our education, to use both fundamental analysis, in this case fundamental valuation ratios, as well as price and volume, which is sometimes known as volume spread analysis. So there we have it. So to sum it up, for the 4 top investing rules for 2012 that will get you ahead, protect your capital and grow your wealth, is 1. What you know, everyone else probably knows as well. So to make money, you have to know something that the next person or the market doesn't know. Okay, so that's also goes for the current, what we are seeing in F&N, and the market sprang higher is because big multinational like Coca-Cola and then Kirin, which the Japanese brewer, are buying to this company, so that we see the price has gone higher. Second one, timing is everything. From a volume spread analysis or price and volume, we want to see sign of weakness at the top to gradually dispose our position or distribute it, and start to accumulate when we see clues or sign of strength at the bottom of the market. And third, which is also affect many of us, and we tend to suffer from confirmation bias, because we only want to hear what we want to hear, and we don't even take or think about opposing idea in our belief system, especially when it comes to investment. And the fourth one is we cannot use fundamental valuation ratios on company, because if you're seeing that, you're only seeing one side of the picture. Now remember, the market, especially in this case the stock market, is very uncertain, so you need to always want to look at both on the price reaction, that is a volume spread analysis, and also look at the fundamental. If you have these 4 investing rules to consider for 2012, I'm sure you will do very, very well. So that's all I have for this educational video series. Thank you for listening. I'll see you next time. Bye bye.